So after trading the stock market for 30 years, I have found that there is one very simple thing that can really put the odds in your favor when you are investing or trading in the stock market. And this week, I'm going to tell you what that is. It's very simple. Anyone can identify it, and we'll do that in just a moment. Plus, I'm going to look at the overall market sectors, and we'll try to figure out whether the market is more likely to go higher or lower in the near term. And then finally, we're going to look at the day trade of the week on PTPI. All right, so is there a simple way to beat the stock market? Well, the answer to that question is yes. And to explain why, I'm going to give you a little metaphor that I think really makes some sense about how the stock market operates. So imagine the stock market is a lake, okay? And on the lake are a whole bunch of boats, and the boats represent stocks. Now you've got two kinds of boats. You've got sailboats. They are the stocks that get moved around by the market. So the market direction is like the wind. The wind is blowing stocks in one direction and then it switches and it blows them in the other direction. And so most stocks, most of the time, are sailboats. They move with the market. And it's all about the market trend, the market direction, or the sector trend or the sector direction. Now the other type of boat on the lake, of course, are the motorboats. These are what we call alpha stocks. Now alpha stocks move on their own story. So if a company in the pharmaceutical group announces that they found a cure for some cancer or some treatment for some cancer that works, that stock's going to move regardless of what direction the wind is blowing. Now the easiest way to do well in the market is to find the hot market, that area of the market that is moving with a strong wind. So if it's the gold stocks, which has been a hot group over the last few months, if the gold stocks are all moving up, that's a hot sector, then look for the motorboats in that sector, the hot gold stocks within the hot sector. It really is the simplest way to do well in the market. You know, conventional financial theory says, oh, diversify, buy a stock in the gold sector, buy a stock in the technology sector, on and on and on. I don't agree with that. I think what you want to do is find the hot market and then trade the strong stocks, the motorboats, in that hot market that are benefiting from having the wind at their back with a strong market trend. All right, so let's get into this week's market analysis. And this is where we'll look at the overall market to have a sense of what direction the wind is blowing. And at the end of this video, we're going to do the day trade of the week, and I'll show you that that's one of the hot sectors in the market. There's a few right now, and let's look at them. So let's jump into the Stockscores website here, and we're looking at the chart of the S&P 500 ETF, SPY. I'm looking at the 30-day 2-hour chart. So each bar on this chart represents 2 hours of trading. Time is moving from left to right, and we have here a general upward trend in the last 3 weeks. That means that the buyers are in control, and we know that because the bottoms are rising. So that's a very simple way to determine what direction the wind is blowing. If the bottoms are rising, trend is up, and so you want to generally be a buyer. Now the S&P represents large cap stocks, and so in the short term, large cap stocks are favorable for buying. Now, if we look at the long-term weekly chart of these stocks, again, this is still the SPY, but now it's a 3-year weekly chart. And you can see that in the 3-year weekly chart, we're generally going sideways. We do have those rising bottoms, but we've got this flat line of resistance right here that the market needs to break out of. So if you're a longer-term investor, it's a neutral market. It's not really breaking through that resistance level yet. Now that could happen very soon because we're right at the resistance line, and we do have rising bottoms, which is a sign of optimism. And all we need now is a breakout through that resistance. So the stock scores are looking pretty good because we have those rising bottoms, but we still need the breakout before we can go bullish in the long term. Now let's look at the small cap stocks. IWM is the best representation of that. Here is the 1-month chart of the small caps, and you can see that different than the large cap stocks, the small caps have not been trending up for the last 3 weeks. They've been going sideways. So the small caps are not doing as well as the large caps. They are building rising bottoms, which is a good sign. That means optimism, but we still need to break out through this resistance level. And I feel like that could happen next week because we were doing quite well in the small cap sector the last 2 weeks. And I feel like we're on the verge of getting some real strength in the small caps. Now, on the 3-year weekly chart, we're still stuck in this sideways range. The market's been in since about this time last year, maybe a little less than a year ago. And if we break out from here, that's great, but we're still facing an uphill battle. So the small caps are not as favorable as the large caps. However, I'm going to show you at the end of the video a sector of the market in the small cap sector that is doing well. And there's a couple that are doing well. We'll mention them as we go through the video today. All right, next up, let's take a look at the Canadian stocks, T.XIU. And here you can see that the Canadian market has moved up nicely the last few weeks. It is still below resistance. There is a slight rising bottom cycle, really got a double bottom here, but this low is lower than these lows. We're coming into resistance, so the market's rallying into that resistance level where I expect it will get stuck. It's kind of a neutral looking chart. And the 3-year weekly, very similar to the S&P chart. We've got resistance, we've got rising bottoms building, and we just need to break out through that resistance level. All right, let's move over to commodities, which is one of the reasons why the Canadian market has done well, because there you see gold stocks moving up the last few weeks. So in the short term, we've got a nice upward trend. And I said that the gold stocks were one of the strong sectors where you can play hot stocks in that sector because you've got a strong wind in that gold market that is helping individual stocks, but also if you have an individual stock within that group that's strong, it can do well. Now, in the 3-year weekly chart, we see a little bit of a problem for gold because gold is hitting this long-term resistance level. You can see it's hit it once, twice, and we're just bumping on the door again. And so that may mean that we get a little bit of weakness in the near term as we hit that resistance level. So although it's a strong sector, I wouldn't want to initiate a lot of new positions here because we are near the tops from the past resistance levels. Let's take a look at oil. Oil really did a surprise turnaround. You'll know, or if you watch this video on a regular basis, you'll know that I was a little bit worried about oil when it broke down about a month ago. It's managed to come back and negate that breakdown there. And it was largely because OPEC surprised with a production cut. And that wasn't really expected by the market, but it has bounced back and we're back into sort of a neutral sideways range on the daily chart. Now, if we go to the 3-year weekly chart, you can see that critical breakdown 4 weeks ago. It broke the upward trend line, but we've overcome that weak signal. So this is back to being a neutral market. Let's take a look at Bitcoin and US dollar. Let's start with the US dollar, UUP. You can see that the trend on the daily is down. When I look at the 1-month chart, you can see the trend is down. So it's bearish in the short term for the US dollar. In the long-term chart, we're really flirting with this long-term upward trend line. We've built a falling top, that's a negative, and we're just testing that trend line. If we break down through this, we may see the US dollar go lower. And that would probably be driven by a breakdown or a lowering of interest rates in the bond market. And we'll look at that in just a moment. Now, one other sector that's been strong in the last couple of months is Bitcoin. I was bearish on Bitcoin for a very long time, but the downward trend line was broken in January, and then we broke out from a rising bottom in March. And that has been one of the hot sectors. So the Bitcoin miners, stocks like Riot, Mara, HUT, HUT, they've all done really well lately. And that's one of the good places to play because you've got the wind at your back for the sector, and then you play the hot stocks in that sector and you can do well. Looking at the 3-year weekly chart, you can see that the trend has changed from down to up. And so I continue to think that this is a decent place to play. All right, let's take a look at the bond market. This is the inverse chart of the US Treasury bonds. So if this is going down, that means interest rates are going down. In the past week, you can see that interest rates rose a little bit, but in the context of the last few months, we are still in a downward trend. And that points to a likely continued move to the downside for interest rates which would be one reason why the US dollar would also get weaker. Now, we haven't broken through support yet, so we want to watch for that first before we get really expecting that interest rates are going to go lower, but that's what the market seems to be predicting. All right, so let's look at my ratings then. US stocks, neutral long-term, bullish short-term, the same for Canadian stocks, the same for gold, the same for oil. On the US dollar, bearish short-term, neutral long-term. Bitcoin, one of those hot sectors, and I'll show you another one in just a moment, bullish on both time frames, and interest rates, bearish long-term and neutral short-term. Now, before I show you the day trade of the week, I want to go back to the chart of the biotech sector. And you can see that biotech, which is generally small cap stocks that are in the pharmaceutical industry looking for cures for diseases, it's been doing quite well over the last 2 weeks. We've had a little bit of a run higher. So in the short term, if we go to the 1 month chart, you can see that the short term chart for biotech is quite strong. And so it's no great surprise then that because the wind is at the back of these stocks, that our day trade of the week this week comes from the biotech sector. Now, this stock was extremely abnormal on Friday, trading very strong volume. Let's draw this in yellow. And so it's a hot stock in a hot sector. And right here, it gave a good entry signal on what I call my pullback play strategy. I build a list every morning of stocks that are trading abnormally, running some algorithms in our active live service. And it identified this stock as one of the candidates for the day. And then we just look for a place to jump on board. There was a few different opportunities. There was one here, but this one was the best one. This is called an intraday pullback play setup. It has a little yellow dot on that candle there, which signifies it has abnormal price and abnormal volume movement against a pullback, hot stock, hot sector, and it did very well as a day trade. For those that get that very simple concept that we talked about at the start of the video, look for hot stocks in hot sectors. It's not hard to figure that out. The stocks that are trading with abnormal volume moving up in a sector that has rising bottoms on the sector chart. You do those two things and it's a pretty simple way to do well in the market. Hope you've enjoyed this week's video. If so, click the like button, subscribe to the channel, but most importantly, trade well.